Welcome back to Fast Market, everyone. Kevin Hinks and Nick Theorakis back here for our cash tag segment. Now I'd like to bring in the co-founder of LikeFolio.com, Mr. Landon Swan, to the show. Landon, let's talk Crocs. Let's go there. These are I'm not the biggest fan. As you know, I'm not the president of the Crocs fan club. I know that LikeFolio has a different view on these, but some of your data has a little red flag on some of the Crocs momentum. Give us your thoughts here, Landon.
Yeah, I tell you what, if people have been following LikeFolio for years, they know that we've been fairly bullish in the past. And if you've seen Andy speak on stage, he may have worn a pair of Crocs a time or two because of that data. But I tell you what, it's turned, and we always follow the data. And right now, it's not great. It's not awful, but it's not great. Judging by where the stock price is, it's had a nice little run up. It's sort of high in the recent history, right? It's not high total over the years, but recent history, it's on the higher side of things. And a lot of that data is a little bit soured. So if you look at, mentions, for example, over the last 90 days, they're down 9%. Over the last 30 days, they're down 15% on a year-over-year basis. So it's moving in the wrong direction for sure. And I think actually a lot of it, and I hate to say it, it has to do with some of the weakness in their acquisition of Hey Dudes. That's about a fourth of their revenue, and that brand has really been struggling compared to Crocs. Crocs, the brand is not doing wonderful, but the Hey Dude brand is definitely doing worse. And you can see here, change in mentions over the last 30-day moving average year over year. Crocs is at the bottom. Some of these bigger names are at the top. Some of the competitors, one of them that we've been profiling recently is Deckers Outdoors. They've made a huge comeback, and the data's been, screaming their name for quite a while here in the last few months. But the opposite's true for Crocs. Even if you look at happiness data, Crocs is at the bottom of the list at about 68%, where On Cloud is up there, I think high or low 80s. Skechers is mid 75s. So they're really far behind there as well. And it shows up in, Google Trends data. It shows up in web data in the same direction that, Crocs is just not doing great. And you can see the discrepancy here between Crocs and Hey Dudes. It's a smaller brand, of course. Like I said, it's about a fourth of their revenue, but their growth over the last year is definitely worse. So Crocs is at -14 year over year. Hey Dude's at -20 year over year. And so it's, some analysts are asking, did Crocs kind of drop the ball on that acquisition, or did they just happen to buy Hey Dudes at the top? You can argue about that, but either way, the outcome is about the same. So we are a little bit concerned with this brand moving forward, with this company moving forward. It pains us somewhat to say so, because we've had some really big gains on Crocs over the years, but we always follow the data, and right now it's just leaning a little bit towards the negative side.
It's an easy balance sheet to figure out. They're supposed to make just over $10 billion. At $35 a pair, that's like 285 million pairs of shoes they have to sell. So it's a pretty straightforward business model. They don't do a lot of bespoke stuff. Some of the comparisons you had up there, like particularly Allbirds, you didn't talk Nike here, it's not the exact comparison, but they're doing a lot more bespoke, small releases, unique kind of collector's items type things. And I wonder, you don't see that from any of the brands kind of under this umbrella. What do you think? So to me, that's a driver of some of the interest in these names and the reoccurring buyers. What do you think is driving the sort of decline here in terms of client interest? Because it is a specific market. You kind of got like restaurants, and there's a specific use case. People wear them and we're really loyal to them, but there's not very much unique about a lot of them. And I wonder if that's something that's driving it, if you guys see that at all in the data.
Yeah, I think, you've got the ugly and comfortable niche, right? That's kind of what Crocs hits. And, I think that for a while it was novel, and I don't want to use the word fad, because I think that it's definitely stronger than that. But I do think that, it's definitely moved away from adults, and it's more towards kids, and that's a smaller market, frankly. Even in just relationships that I've seen, Hey Dudes has also kind of gone away with adults, and you see them more with kids. And so, it's just, I think that the perception of the product being ugly is just kind of faded away a little bit with adults. And I think that, they're focusing on some of the kid stuff like you guys showed there, all the, I forget what they're called, nibbits or something like that. So I'm sure my kids are going to get mad at me for butchering that. But the little things that you plug in, that's great. I mean, you got to hit your core market, but I think that they need to do a better job with just broader appeal. And I think that's one thing that Uggs has done with Deckers Outdoors. They've done a fantastic job of that. They're kind of making a comeback. In fact, if you rewind LikeFolio data 5, 6, 7 years, you'd see us saying the exact opposite. Uggs are out, Crocs are in, but now it's flipped, and that's really interesting because, like I said, the stock has done really well over the last little bit. They in January they had an upward revision where they're saying that Crocs are going to be up about 10% on a year-over-year basis. Hey Dude's down almost 20%. So that it's good with the revenue side of things on the revision, but last quarter they got just hammered. So they were coming from a lower bar. I think the stock was down 9% after that report. So I think a lot of the bad news is priced in. I think a lot of the good news is priced in. But I would issue some caution here if you're thinking about investing in a shoe company. A lot of the ones that we profiled on those charts are better investments, in my opinion, than Crocs here.
I think you put your finger on one of the big issues here, Landon, and that is the demographic that seems to be drifting lower and lower and lower. That said, there's a lot of healthy things about this company. They're buying back stock. They're reducing debt. They're buying back, how about this? They've got $900 million left on a stock repurchase program. That's 14% of the shares they're buying, a massive amount of this company. So they're doing all the things that a healthy company does, Landon, but your data certainly points to a different idea.
Yeah, it's just, you want to see a lot of growth. And I think that you can be healthy without a lot of growth. And I think that's kind of where we're at, is like, okay, this is a solid company, but the ratios or the growth numbers that we've seen in the past, and like the summer of 17 or 18, those were some of the better times for Crocs as far as the growth goes. And now we're starting to see very stagnant growth. In fact, negative growth as far as consumer interest and demand. So I think that both things can be true at the same time. They can be healthy, but it can be a little bit less appealing if you're thinking about, what's the PE ratio, what's the growth going to look like over the next 2-3 years. And right now, everything that we've got is just a little bit on this company, right? We're not saying smash the sell button, but if you've got fresh money looking to invest in shoes, there's a lot of better places, I think.
Landon Swan, we appreciate you coming on as always. And by the way, the perception of ugliness is not perception, Landon. They are hideous. But my kids own several pairs, so who am I to talk about taste? Landon Swan, thanks for coming on as always. Good to see you, buddy.
Thank you.
All right, Nick, let's get to a trade on